Coming up on Business Incorporated, IMF approves $270.83 million to Namibia to address the COVID-19 pandemic. Johnson & Johnson COVID-19 vaccine approved in South Africa for wider use. And Kenya seeks debt service suspension to June 2022. Hello and welcome to the program. I'm Chimeze Obi Iwagu. We'll begin the show with Thursday's trading figures as markets we track are closed today for the Good Friday public holiday. Nigeria's NSE sustained its bearish run as the market ended Thursday's session negative by 0.33%, while the JSE index in South Africa jumped 1.13% at the close of trade. The EGX 30 in Egypt also closed the week negative by 0.03%. Kenya ended Thursday's session positive. And markets in the Middle East ended the week mostly positive on Thursday, except for Saudi Arabia's index, which declined 0.12%. On the flip side, the Qatari index rose by more than 0.5%. In the UAE, the Abu Dhabi index gained 0.49%, while Dubai's index added 0.29%. In Europe, stocks which are closed today for the Good Friday holiday ended higher on Thursday amid a raft of data releases from the region. The Pan-European Stoxx 600 ended the session up 0.6%, with tech stocks climbing 2% to lead gains as almost all sectors and major bourses closed in positive territory. European investors digested data releases from the region that can offer more clues on the state of health of the European economy. Eurozone manufacturing activity grew at its fastest pace on record in March, with IHS Markit's final manufacturing PMI coming in at 62.5 compared to February's 57.9. Meanwhile, in London, the FTSE index closed 0.47% higher. The FTSE 100 rose 0.35%, while the FTSE 250 increased by almost 1%. In Asia, not all the markets went on holiday for Good Friday celebration. Shares in Japan jumped on Friday after the S&P 500 surged to a record close overnight on Wall Street. The Nikkei 225 surged 1.58% to close at 29,854 points as shares of Japanese conglomerate SoftBank Group popped up 4.22%, while the Topix rose 0.71% to finish the trading day at 1,971 points. In South Korea, the Kospi closed 0.82% higher at 3,112 points. Mainland Chinese stocks also rose on the day. The Shanghai Composite was up 0.52% to 3,484 points, while the Shenzhen Component gained 1.02%. Most other major Asia-Pacific markets like Australia, Hong Kong, India, and Singapore were closed for Good Friday. And markets in the U.S. are also closed for the Good Friday holiday. But on Thursday, the S&P 500 crossed the 4,000 threshold for the first time as Wall Street built on a solid march following the rollout of President Joe Biden's infrastructure plan. The Dow Jones Industrial Average climbed 0.52% to 33,153.21, while the tech-heavy Nasdaq Composite jumped 1.18% to 13,480.11. Tech stocks led the gains as bond yields continued to retreat from recent highs. The 10-year Treasury yield fell 7 basis points to around 1.68% on Thursday. The move in stocks came after the President Biden introduced his multi-trillion-dollar infrastructure proposal, which includes spending on roads, bridges, green energy, and water system upgrades. This marks the second major spending push of Biden's presidency after he signed a $1.9 trillion relief and stimulus bill on March the 11th. And on the global oil market, the Organization of Petroleum Exporting Countries and its allies on on Thursday agreed to gradually increase crude output over the next 3 months. At the 15th meeting held yesterday via video conference, OPEC and non-OPEC ministers agreed to raise crude output by 350,000 in May, another 350,000 in June, and roughly 440,000 barrels per day in July. The ministers noted that since the April 2020 meeting, OPEC and non-OPEC participating countries in the Declaration of Cooperation had contributed to adjusting downward global oil supply by 2.6 billion barrels of oil by the end of February 2021, which has accelerated the rebalancing of the oil market. And ahead of that meeting, OPEC Secretary General Mohammed Barkindo stressed the need to remain very cautious as a result of ongoing uncertainties and fragility caused by the coronavirus pandemic. Similarly, Saudi Arabia has previously encouraged allied partners to remain extremely cautious on production policy, warning the group against complacency as it seeks to ensure a full oil market recovery.
It has proven to be a prescient decision. The Declaration of Cooperation and the steadfastness to conformity and compensation from participants has been central to the recovery of the industry that is such a vital cog in oil in the global economy. Your Highness, we need to continue on this path, be guided by the data and analysis, review the outlook on a regular basis, and take things one step at a time. The cautious and careful approach has proven effective thus far, as can be viewed in the decision taken at the 14th ministerial meeting. The decision to approve a continuation of the production adjustment levels of March 2020 into April was judicious, particularly given the market volatility we all witnessed in the last 2 weeks of March, with significant market sell-offs and crude futures flipping into contango. This was driven by a combination of rising coronavirus cases and new variants, as you just mentioned, further lockdowns in Europe, concerns over softening oil demand, and generally more fragility in the outlook. Crude futures, however, did move back into backwardation following the longer than expected blockage of the Suez Canal. So allow me to provide you with a few highlights and shifting trends to focus since we met last at the beginning of March. Last month, we saw global economic growth in 2021 at 4.8%, if you recall, but expectations are now higher at 5.1%, as mentioned by Alexander Novak. The additional U.S. stimulus measures are a major driver in this upward impetus, but our recent scenario analysis suggests that this slight uptick may need to be revised given the many uncertainties and fragility elsewhere. Global oil demand in 2021 is slightly lower at about 5.6 million barrels a day. We also need to remember, Your Highness, that demand contracted by a whopping 9.6 million barrels a day in 2020. So a return to 2019 levels is not expected before 2022. On the demand front, we continue to see a divergence between the first and the second half of 2021. The first half has again been adjusted lower, primarily on the back of extended measures and new lockdowns in many key parts of Europe, as mentioned by the president of the OPEC conference, Pedro Azevedo. Oil demand growth in the second half, however, remains intact. This reflects prospects for a stronger economic recovery with the positive impact of further vaccination rollouts. What the economic and demand outlook are showing us is that we need to be watchful and tread a prudent path. There remains many impediments and potential obstacles to the recovery.
Mohamed Bakindo, the OPEC Secretary General. In the meantime, oil market, which is closed for the Good Friday holiday, saw prices jump higher on Thursday following the announcement by OPEC and its allies of a gradual increase in crude production starting next month. Brent crude for June delivery climbed by 2.93% to $64.68 a barrel, while US WTI surged by 3.33% to $61.26 a barrel. The OPEC Plus alliance is currently cutting crude oil production by just over 7 million barrels per day in an attempt to prop up prices and reduce oversupply. And in the metals market, of course, the market is also closed for the holiday, but gold prices rose over 1% on Thursday, buoyed by a retreat in the dollar and U.S. bond yields, while grim U.S. jobless data clouded the outlook for an economic recovery, adding to the metal safe haven appeal. Spot gold rose 1.2% to $1,727 per ounce, while U.S. gold futures settled up 0.7% at $1,728. Elsewhere, silver rose 0.9% to $24.61 per ounce, while platinum edged up 1% to $1,199, and palladium was up 1.1%. Away from the markets now and back here on the continent, the Executive Board of the International Monetary Fund has approved an outright purchase of about $270.83 million to Namibia under the Rapid Financing Instrument to help the country address urgent balance of payments and fiscal financing needs stemming from the negative impact of the COVID-19 pandemic. The IMF financing will also contribute to catalyzing additional financing from development partners, including the purchase of vaccines and deployment of the vaccination campaign and interventions needed to mitigate the pandemic's severe socioeconomic impact. Key elements include stepping up emergency health and education spending, strengthening social safety nets to protect the most vulnerable from the impact of the crisis, and supporting the private sector and protecting jobs. Namibia has been severely affected by the COVID-19 pandemic. Worsening global conditions and a local outbreak have deteriorated Namibia's short-term macroeconomic outlook, hindered mining exports, tourism, investment inflows, and weighed on tax revenues. And the Johnson & Johnson's coronavirus vaccine has been approved by South African regulators for general use. This comes days after President Cyril Ramaphosa said the country will get more than 30 million doses of the vaccine. The U.S. drug maker's vaccine has so far only been used in the country to inoculate health workers, and its approval is a boost to a national rollout that's been hit by a series of delays. The South African Health Products Regulatory Authority last month approved the shot developed by Pfizer Incorporated and BioNTech, though AstraZeneca's PLC has been spurred due to concerns over its limited efficacy against a variant identified in the countries late last year. J&J agreed earlier this week to supply as many as 400 million doses to the African Union through the end of next year. The vaccine is seen as beneficial for Africa as, in addition to being a single dose, it can also be distributed at regular fridge temperatures as opposed to the super cold requirements vaccines made by Pfizer and Moderna. And Egyptian authorities may seek over $1 billion in damages for helping to clear the Ever Given from the Suez Canal as a dilemma emerges over who might foot the bill. The chairman of the state-owned Suez Canal Authority explains that the figure is based on canal revenue losses, the cost of equipment and machinery, and the manpower hours for the 800 rescuers who freed the ship. He says he hopes a compensation agreement can be reached in 2 or 3 days, or else Egypt might hold the ship in the Great Bitter Lake, where it is currently undergoing maintenance checks. Authorities say the backlog will be cleared by Saturday, but the maritime traffic jam could have long-lasting repercussions on ports and supply chains worldwide. And Kenya has sought the debt service suspension initiative extension to June 2022, a one-year extension from the earlier granted June 30, 2021 debt service suspension secured in January. Besides the relief under the DSSI, the country is also pursuing new limits access to IMF funds through the reallocation of existing special drawing rights and the allocation of new special drawing rights. Such will allow faster access of disbursements from the IMF Rapid Credit Facility and the Rapid Finance Instrument granted to countries facing urgent balance of payments needs. With a bulk of payments of debt payments due this year, Kenya is pursuing a $1.24 billion Eurobond by June 2021 as part of the Treasury's planned debt restructuring. Its return to the Eurobond market is against the terms of the debt service suspension initiative, which include a break from external commercial financing unless exempted. We'll take a break, and when we come back, we'll talk more on other developments here on the African continent. Just stay with us. We'll now take a trip to Ghana to get a wrap-up of the week and get more insight on recent developments there in the country. George Waife, the business editor at Joy TV Ghana, joins us now. Hello, George. Thank you for joining us. Good afternoon.
In Nigeria, it's great here in Ghana. Despite the COVID-19 restrictions, we are managing here in Ghana.
I see that. Yeah, well, in order to encourage competition for the AFCFTA, the government says it has waived import duties and some taxes. What goods will be benefiting from this waiver?
Well, basically, we're looking at goods that are more of raw materials that contribute to the production of goods. So if you look at maybe like production of soap and all the rest, what are the critical ingredients that goes into it? Production of maybe minerals as well. What are the critical raw materials that goes into the production of these stuff? So these waivers are going to directly to raw materials that contribute to the production of these final goods in Ghana, not finished products, but these are the real inputs that they need in producing these stuff, and that is where these taxes or these waivers are going to. So anything that these industries would need in producing their stuff, government is looking at how they can waive these charges on them.
During the week, the Minister of Trade and Industry said in order to harness the benefits of AFCFTA, the Ghanaian private sector required fiscal incentives. Did he hint at some incentives the government will be putting in place for businesses?
One critical thing is about access to finance, and government is actually working with some of the commercial banks where it actually extends some grants through these banks as well. So we can talk about the Exim Bank here in Ghana that has a facility in place actually to on-lend to these businesses at a more very competitive rate. Some of them are even grant as well, where they can extend to these businesses who want to take advantage of this African free trade area. So they are working through some of these banks, and also the Bank of Ghana as well is also working to extend some incentives as well to these commercial banks that on-lend to businesses that are trying to take advantage of this whole economic free trade area. So some of these things are it's basically financial and in terms of lending support as well, and also government playing a lead role where they would actually provide some technical support to businesses as well that want to take advantage of this free trade area. That's what we are looking at here.
Well, away from the AFCFTA, on Tuesday, the Ghanaian Parliament approved the 2021 appropriation bill. What key sectors does this budget prioritize?
You can talk about taxes, and of course, even though some new taxes as well were introduced, there are also some areas where government is trying to offer some kind of incentives for businesses that have been hit by COVID-19 and they need a little bit more time in paying their taxes. Also, the government is looking at a situation where they can embark on some sort of targeted spending in some critical areas that can stimulate growth. So you're looking at, well, if it has to do with construction, even though they are not going to do new construction, they're looking at how can they fast track the completion of existing projects as well. Businesses that were hit by COVID-19 as well, can they continue extending support to them? We have a situation where we have some small businesses that have been badly affected. Government hinted in this document that they will continue to extend some support to them. Also, arrangement in place where there can be an extended period when it comes to them paying their taxes as well to the state. So these are some of the critical areas that government wants to look at when you want to look at the budget in the area of targeted capital expenditure, extending more relief to businesses that have been hit by COVID-19, and also looking at an area where maybe if they want to, the agri sector, for instance, how can they also support agro-business in these areas that they can produce more food? Because what COVID-19 has taught us is that we couldn't import more into our country because of related restrictions. So how can businesses in the agricultural space also be supported to actually grow more food in the country and even maybe export as well?
All right, so Ghana successfully issued its $3 billion Eurobond, making it the first sub-Saharan African sovereign to issue a Eurobond in US dollars since the onset of the COVID-19 pandemic. What does this say about investors' interest in Ghana's economy?
Of course, at the end of the day, Ghana's Eurobond was oversubscribed, and relatively, government wanted to raise about $5 billion. They got $6 billion. But always you would ask yourself, when it comes to Eurobond, the prices are very, very important too. At what cost do these investors want to lend to you? Even though government was looking at a range of about 7 to about 9%, there was a situation where funds came in above 9%. Therefore, we understand the government just took about $3 billion and then returned the rest to investors. Also, don't forget that there was a novelty where they introduced a 4-year bond that would be zero rated, meaning that within the first 3 years, there wouldn't be any coupon payment, and then there'll be a bullet payment at the last year. And that also saw some interest as well. But if you look at it on the whole, even though it was oversubscribed, which you want to draw a lens as an investor interest, it also came at a high price. And the challenge is, how can or should government invest these monies in sectors that can repay for itself so that we deal with that rise in debt stock? The IMF has warned, or the World Bank has warned, that when it comes to Ghana's debt stock, which is more than $50 billion, there's an impact on us generating the required revenue to service the external debt component. So it's a concern that even though there is interest, they've been able to lend to us, how are these monies going to be invested to ensure that we'll be able to pay them back on time? That is a concern for many people here in this country, even though we've gotten the critical money that we're looking for from investors, which could also signal high investor interest in Ghana.
All right, George. Well, a quick one before I let you go. How is the distribution of vaccines going on there?
It's been great. We've had more than 500,000 people being inoculated with these vaccines. And this week we're moving to the second phase. I've taken my first jab already. My second jab should be on April 30th. It has been good. We thought that there would have been serious hesitant to take these vaccines, but for the areas that have been highly hit by COVID, being the capital city, we've seen massive inoculation in these areas. And if this trend should continue, it appears that we might make great progress in terms of having a chunk of the population as well being inoculated. And don't forget that Ghana's economy more of suffered a hit down or was slowed a little bit because of COVID. All the numbers that the Bank of Ghana has brought out now shows that we are even hitting areas higher than the pre-pandemic levels in the area of revenue mobilization, the area of port activities, and the area of pension contributions. The data suggests that we are picking up strongly, and if all other things being equal, we could rebound strongly by the third quarter of this year.
Fingers crossed. Thank you very much, George. We do appreciate your time. Enjoy your Easter holiday.
The same to you.
Thank you. Well, that's a wrap on today's edition of the program, and of course for the week. Thank you for watching. I'm Chimeze Obi Iwagu.